So let's go over capital sizing. We're diving into a crucial aspect of day trading. This is how much capital you should use. This topic is very, very overlooked. And even if traders know about it, most of them don't follow by the rules and then wonder why they blow accounts left and right. We'll start with the 1 to 3% rule, which most people have heard of. It suggests that you should only risk 1 to 3% of your total trading capital at any given day. So if you have $100,000 in your trading account, that means your maximum risk for the day should be $1,000 if it's 1% and $3,000 if it's 3%. Now, $3,000 might seem like a lot, but keep in mind it's on the higher end of the spectrum. I personally would not do a $3,000 loss limit on a $100,000 account, but if we were going down to a $10,000 account, I would do 3% and have a $300 loss limit. Now that's where we get into the greed factor. There's a fine line here that I talk about often. It's a balance between not wanting to sit at the screen and make no money, but also coming with this, you cannot be greedy, because if you're too greedy, you're going to end up losing money. So at the end of the day, it's really how much you think your time is worth. Me personally, I would not want to sit at the screen all day to make $100. Some people are perfectly fine with that, and it's better to be fine with only making $100, honestly, because the less you risk of your account, the less chances you take of, one, being unprofitable, or if you have a bunch of losing days, you're going to really put a dent in your account, and two, emotional with the money. So I also just want to clarify this also. If your max risk on the day is $300, it doesn't mean you're going to lose $300 on your first trade. If you make, let's say, 2 trades a day, you should aim for a calculated risk of $150 per trade, or maybe $100 loss on your first trade, and if it comes around to it, $200 loss on your second trade. This way, it gives you some cushion and some breathing room. Now, from there, we get into the risk to reward ratio. With the normal risk to rewards that I've been teaching, or that any trader should really go by, is a 2.5 or greater. You should be aiming to make at least $300 per trade or more. If you do this correct with the right size capital and the right trades, you will substantially grow your account. But as our account grows, and I'll repeat this, as our account grows, we do not scale up with it. For example, now if we have $20,000, we still keep our max loss around $300 for a little while after, and we only slowly scale up to maybe $400 or one extra contract once we detach fully from the money and it's not emotional. I wouldn't be jumping from $300 max loss to a $600 max loss. Doubling down that max loss in your brain will make you trade completely different. Also, once we start getting good trades and our capital starts growing, it is essential to pay ourselves. We're going to take 50% or somewhere around there, whatever you feel comfortable with, of what we make every week or month, and consider it our hard-earned salary. We're not working for free, and we're not gambling. We are in a business. Now we get into the scaling up to a bigger account. Let's say some time has passed and now we have a $50,000 account instead of a $10,000 account. Our max loss is now about $700. Not $1,500, $700. We've also paid ourselves about $30,000 because we've been taking 50% of our profits. And not only along with paying ourselves, our total risk is now a 1.5 of our account and not a 3% of our account. So now we're looking to make around $2,000 a day instead of $900 a day. And we're looking to risk about $700 a day. And our capital has 5 times its money, along with us taking $30,000 out. This is where you can start to see significant profits. We're making this awesome money. Our total risk is way lower, and we're completely detached from the money because our account is 5 times the size and we're only risking a little more than double of our original $10,000 account, and we have money in the bank. Now also, if we can average $2,000 a day, not saying that every day we're making $2,000, I'm saying that some days we can lose $700, some days we can lose $300, some days we can make more than $2,000. But if it all sums out to be a $2,000 average a day for the year, that is a $500,000 trading year. And I just want to show the money is in the math. 3% of 10,000 is $300 max loss. A 3.0 risk to reward on this will be $600 to $900 a day. Now a 2% of 20,000 is a $400 max loss, and now we're looking at $800 to $1,200 per day. And a 1% of $50,000 is a $500 max loss, and we're looking for about $1,000 to $1,500 per day. Somewhere in this general area, if you can mentally handle it, should be your scaling size. Now that we're scaling higher and we're getting smarter, we're becoming a better trader. Our overall percentage of our capital risk trades have decreased, become way less emotional and attached to the money. But also, even if your account is that much greater, it doesn't automatically mean that we can size up. Maybe we are not mentally ready for it. Some traders will not be mentally ready for it. Some traders may still feel the fear of losing $400 even if their account is $100,000. This all depends on the person. We have to cap ourselves at our loss percentage if our mentality does not allow us to go higher. We'll scale up little by a contract or a couple $100s to our threshold. If $1,000 is too much to lose at a $200,000 account, we scale up even slower till we find at the end of our threshold that we can trade without extreme emotions and fear. Now, this is where consistency comes in. If you can make $100 consistently with a specific setup, we can scale it to $1,000 or even $10,000. It just comes with capital. Trading is about repeating the process on a higher scale. It's what transformed a trader to $50,000 to $100,000 to $1 million. The work in trading itself refines slightly, but the core remains the same always. What just scaled your account from 10,000, 20 to 50 can repeat the process all the way up to 200, 500, $1 million. So to put it all together, it's all about managing your risk and protecting your capital and scaling up steadily as you become more skilled and emotionally resilient as a trader. You stay disciplined, you pay yourself, and you don't let greed cloud your judgment. The journey from a small account to a substantial one is marked by patience, discipline, and continuous learning. It's not about the size of the account, it's about the quality of the trades. Everyone who tries to get rich quick or take these crazy trades with high risks and high rewards always ends up blowing their account and having to restart, not once, but upwards of 8, 12, 15 times. If there's no risk management, there will be no trader.